Hello everyone and welcome back. My name is Greg Furman, market analyst here at TraderPlanet.com, and these are the market positions for December the 14th, 2011. Now, to get started here tonight, we're going to be looking at something different, specifically the ProShares Ultra Short Oil and Gas, the DUG. Now, with the anticipation of further US dollar strength, which I've been talking about on the Forex Weekly Outlook on the different webinars, this looks like a very good opportunity here buying this ultra short. We have our predicted MACD, predicted TSI getting ready to break above that trigger line, predicted short, medium, and long-term differences all pointing higher. And again, this, with the dollar strength, a lot of the things we're looking at, it's likely that what we're going to see here will be further US dollar strength, which will put a lot of pressure on the different commodities: gold, oil, silver, copper, equities, a lot of these different things. So we're going to take advantage of this particular move and the fact that we're very close to getting a significant buy signal from Vantage Point on this. Now, looking at our short-term crossover, we're going to bring this up so everybody can see it. Our short-term crossover is crossed actually several days ago. Our medium-term crossover is just crossing, and this is a signal that I really like. Now, our long-term crossover is of course not completed yet, so we're getting into this trade a little bit early, but I like that because of the setup. So what we're going to do here now is we're going to go into the daily report from Vantage Point, have a look at the predicted high and predicted low, and see if we can narrow this entry point down. Now again, we still have volatile trading conditions in December, but things look pretty good. So for here, we're looking at a pullback towards the 26.65 area. Again, the close 27.20, just so everybody sees that. So we've got 26.65 as our predicted low, 28.47 is our predicted high. Now again, this is a very good alternative to going in and shorting crude oil in the futures market, shorting the RBOB contracts. That can be very expensive. So this particular ETF, this ultra short, is an alternative to that, slightly leveraged depending on how you're going in here, but still a very good alternative when we're in extremely choppy trading conditions. And again, if we look at our charts here, our charts suggest that if the dollar continues to rally, which I suspect it will, we shouldn't have any trouble hitting back above this 32 mark. So short-term traders, you know, you're going to pick up $1 a share, but your medium and longer-term traders, we could be looking at a much bigger move. Now, again, I want to point this out. Not that long ago, back here in October, we were at $46 per share on this particular ETF. So definitely something you want to keep in mind there. Now that's our first position for tonight. Now our second position is going to be in the Forex market, specifically the US Canadian currency pair. Now first and foremost, I want to warn everybody, this is highly correlated to that ultra short with the oil and gas. So you do not want to trade both of these things at the same time, in my respectful opinion. Now with US Canada, we have some good support now sitting down at 102.38, 102.35, 102.37. We can see that this triple EMA cross is getting ready to complete. Predicted short, medium, and long-term differences all pointing higher. Everything looks good there, and we're coming out of, I wouldn't even say oversold territory here. Predicted MACD is staying above that zero line. The continuation of the new uptrend, in my respectful opinion, is still in place. The move lower was corrective in nature. It was Fed-induced, the Fed dumping that liquidity into the system, trying to artificially prop up those equity markets, again, weakened the US-Canadian pair. But once the smoke clears, we've gone through, there's not going to be any QE3, not at the particular moment, and we still have a European crisis. This doesn't support a strong Canadian dollar. Falling commodity prices again hurts the Canadian dollar, and of course the Canadian economy has not produced a single job in 3 months. That doesn't help. That doesn't bode well for the Canadian dollar either. So with that said, we can identify our key levels of support down here at 102.38. From here, we can go into the daily report and have a look at our potential entry point. Now when we look at our predicted high and predicted low for tomorrow, we have 102.64. So for tomorrow, we're going to be looking at an entry point somewhere around that 102.85. I want to give this, I don't think we're going to pull back quite this far to the 102.64. I think we're going to be maybe just under that 103 mark. The buyers are likely to come back in, and then we're going to be looking for a move towards the 104 area. Neural index up for the 4th day in a row. You can see that our predicted short and medium term differences both turning positive. So this trade looks quite good. But again, what I want to point out very clearly is that there's a high correlation to that ultra short. Now, we are going to see increased volatility in the currency, equity, and commodity markets in the month of December, a very choppy trading month, but still, as you can see, we have some good positions lined up, a terrific short today on the S&P 500, continually selling into that strength. So with that said, these are the market positions for December the 14th, 2011, and again, my name is Greg Furman, market analyst here at TraderPlanet.com.